With long lower shadow appearing after the share price soar. And on the next day, there's this large bearish candlestick with gap. Would you make entry for it? If you choose to buy into it here, and what happened next is the share price falls sharply within the next couple of weeks. Now, another stock came out to this candlestick with long lower shadow again after soaring, and this shooting star appeared on the next day. Would you still buy it? After having the painful experience from the last scenario, this time around, you definitely would want to think twice before taking any action. The share then went through a small price correction for about a week time and happened to have another candlestick with long lower shadow here. The next day, a large bullish candlestick appeared. So, do you buy or don't buy here at this point? Thinking about the past experience, you most likely will just let it go. As a result, the share price soared for the next few days and you start to regret of not making entry there. If this is you, feeling upset and you had no idea what's happening, then this is a video that you must watch till the end. When a candlestick with long lower shadow appears in the shares that you are monitoring, there are two possibilities that might occur. The first possibility is the typical sign of the stock market main force pushing the share price up. How do we tell this? The next day after it appears, the stock came out with a candlestick closing above its closing price. A bullish trend can then be confirmed. We call this candlestick a confirmation candlestick. Now, the second possibility is the market main force baiting retail investors like us to make entry into the share. On the next day, the candlestick happened to close below the closing price of this candlestick with long lower shadow. We can then confirm it is a sign of the share price falling soon. And this candlestick pattern is known as hanging man. Hanging man indicates that the long lower shadow is formed just to attract more retail investors to make entry, so that the main force can liquidate their holdings easily to take profit within the upcoming days. Let's go back to the examples we have seen just now. In the first example, at the high level of price, a bearish candlestick appears with gap right after the hanging man. As what we have learned just now, this is exactly the pattern of the main force baiting us to make entry at this point, so they will be able to take profit within the upcoming days. Now, for the second example, when a candlestick with long lower shadow appears for the first time, what came out on the next day is a small bearish candlestick which doesn't close above its closing price. Hence, the share went into price correction for the next few days. But for the second candlestick with long lower shadow here, a large bullish candlestick appears and closes much higher than its closing price. This indicates that the price correction here is actually a washout phase by the stock market main force, and their final objective is to push up the share price till a certain price level that they are satisfied with before they start liquidating holdings. In my opinion, what's real important for candlestick with long lower shadow is the location where it appears. A long lower shadow is formed as the share price falls to a much lower level during trading hours, and strong buyers step in to push the share price back to the top before the market closes. Therefore, if a candlestick with long lower shadow appears at a relatively lower price level or at the previous low, it's called hammer, and it can be a great bottom catch signal as strong buyers step in to pick up the shares. The likelihood of the buyers continue to push up the share price is absolutely high. However, if it appears at a high price level, it can be difficult to predict the share's upcoming movements, and this is exactly why I have created this video. I would suggest you analyze the share with at least another one indicator, such as 5 days simple moving average, for higher accuracy in your analysis. The reason why it's as short as 5 days instead of 13 or 21 is because analyzing shares with candlestick pattern is mostly for super short term or short term trading. Think about it. Every single day give us one candlestick. What do you do if we have a hammer today and a shooting star within the next 2 days? Would you hold or to sell? Therefore, using 5 days simple moving average will be great, as it is one of the important numbers in Fibonacci series, and the result will surely amaze you. Other than that, you may also try out some other indicators like MACD, ADJ, and RSI. If you face any issue in trying these combinations, you are always welcome to leave me a text through my contact details available in the description box below this video. The best practice is to drop me a screenshot directly, so I know exactly what is the difficulty that you are facing and able to assist you efficiently. Alright, here's a short summary for today's topic. Do not buy if you see this type of candlestick with long lower shadow. Long lower shadow are very common in the stock market, as we can see them appearing almost every single trading day in different stock counters. Through the relationship between the candlestick with long lower shadow and the candlestick on the second day, we can now easily differentiate is it a washout or a false signal by the main force of stock market. If a large bullish candlestick that closes above the closing price of the candlestick with long lower shadow right after it, especially when the share price is at a relatively low level, it is a strong buy signal for us. However, if the candlestick appears on the day after it does not close above its closing price, it is obviously a false signal created by the main force of stock market. We should then hold ourselves back instead of making entry. The situation can be worse if the combination appears at the high level of share price, where the big boys are more likely to start liquidating their holdings and take profit. Okay.